Hi everyone, welcome back to Saheb Academy. Today in this video we are going to understand the concept of provision for doubtful debts. Now this is also known as by different names. See here, allowance for receivables, provision for bad debts, provision for debtors, allowance for doubtful debts, allowance for irrecoverable debts. Okay, so many different names are there in different books, but you don't worry, we will call this in this video series as provision for doubtful debts. Is that clear? It's the same thing. So here we are going to understand the concept as well as the accounting treatment that you have to do regarding this in journal entries, in ledger accounts, in trial balance, as well as the financial statements, profit and loss and balance sheet. We are going to get the whole picture. Is that clear? So let's start the video and let's understand this from very basics. Now first let's understand some basic terminology related with this topic. It's really simple. See here. The first one is receivables. What do you mean by receivables? Whatever money you have to receive from any third party is called as receivables. For example, let's say you have a business and you have sold goods to your customers on credit, A, B, C, D, E, F, G. Okay, so many customers are there. You have sold goods to them on credit. Credit means they have promised you to pay in future. Immediately you have not received any money. In future you will receive. So immediately what has happened? Immediately you have a future economic benefit, right? Future economic benefit. So that's an asset, and that asset is called as receivables. You're going to get money from them, isn't it? You're going to receive money from them. So that's called receivables, money which business has to receive from any third party. And it's also known as debtors, trade receivables and AR, account receivables. Okay, so that's receivables. You understood that. Now what do you mean by doubtful debts? See here, doubtful debts are also receivables only, but here you have a doubt. You have a doubt that that person C will run away and will not pay you money after 30 days as he promised. Okay, you have a doubt that D person may die because his medical condition is really bad right now. So these are called doubtful debts. You have a doubt that you will not get money from them. You will not get money from them. These are the receivables which might become irrecoverable. Yeah, is that clear? Simple. So in this case what we do is, in this case we make a provision. These are receivables only. Okay, these are receivables only, asset only, but for this portion we make a provision. Now what is provision and all we'll discuss, don't worry, right? And then we have got bad debts. Yeah, the third term is bad debts. What do you mean by bad debts? Bad debt is the worst scenario. These are the receivables which are definitely not expected to be received. Yeah, let's say you sold to some customer and let's say he has not paid you, and let's say 8 months or 9 months has passed by and that person is not picking up your call and all, then definitely you are thinking that you are not going to get the payment. So it's a bad debt. Is that clear? Is that clear? That's what a bad debt is. These are the receivables which are definitely not expected to be received. It's also known as irrecoverable debt. So it's a loss for the business because we didn't receive the money. It's a loss for the business. So in this case what we do is, we immediately write off this loss. We immediately write off this loss, and I have made a video on this, like how you have to write off this loss. Yeah, you have to take it to P&L. Like two methods are there. The first one is you will immediately take it to profit and loss if provision is not maintained. Yeah, that provision thing which we are going to study in this video now, if that thing is not maintained in the business, then immediately you will write off through profit and loss. Okay, you will cancel off that loss through profit and loss. And the second thing is you are going to write off through provision if provision is maintained, and that is what we have to study in this video. Properly understand how the bad debts will be written off through provision and all. Don't worry. So you understood now the basic terminology. Whatever money you have to receive, these are also the receivables, but here you have a doubt, and bad debt is the worst case scenario, definitely not expected to be received. It's a loss. We have to write off this loss immediately. Fine. So now let's get back to the video. Now let's take this example to understand the concept of provision for doubtful debts. Let's say for example you have started a business in the current year and almost a year has passed by, but just before the year end, just before preparing the financial statements, you have made credit sales of 1 lakh. So tell me, how will you record this credit sales in your accounting books? You will say it's really simple. We will debit the debtors or receivables account because it's an asset, it's increasing, we have to debit that, and we'll credit the sales account because it's our revenue, it's increasing, we will credit that. Debtors account debit to sales account, 1 lakh, 1 lakh. That's the journal entry. Yes, absolutely right. That's journal entry you will pass. Now, the second question is, if you are preparing the financial statements, then where do these two items go in the financial statements? You will say again really simple, sales is revenue, so it will go into the profit and loss account. Debtors or receivable is our current asset. Why it's our current asset? Because we expect to receive money from receivables or debtors within next 12 months, so it's a short-term asset. We call that also as current asset. Mainly we call that as current asset only. So that's our current asset and it will go into the balance sheet. Okay, clear. Now let me ask you one important question. Can you expect 100% definitely that you are going to receive this 1 lakh in the next 12 months? Can you expect that? Can you expect definitely that you are going to receive 1 lakh? Of course not. If you are a business person, then you will say definitely not. Of course not, because in business there is always a risk element, risk factor. Here what you have done, you have sold goods to your customers on credit. They have just promised you to pay after so and so days, some 15 days, 13 days, 10 days, right? So these are just words. Of course, there will be small percentage of people who will fraud you. They will just run away, they will go bankrupt, or maybe some people will die, right? And you may not receive entire 1 lakh. Of course, there is a risk. Yeah, there is a risk. So that is why when you made the credit sales and then you got this asset, debtors or receivables, right, in your books, then of course you will have this estimation, some estimation in your mind, some notion in your mind that some of the people will not pay, some of the people will not pay me back, right? Maybe for example, let's say you expect that, understand the word properly, okay? You expect that 95% of this 95,000 will pay, okay? So that's called good debtors or good receivables. And about the remaining 5%, which is 5,000, 5% of 1 lakh is 5,000, you have a doubt. You have a doubt. You are expecting that you may not receive money from those 5% of the debtors, okay? And this may become, not definitely, this may become bad debt in the next year. This may become bad debt in the next year. What do you mean by bad debt? Bad debt means loss, complete loss. You have lost complete hope of recovering the money. Maybe that person has gone bankrupt, that person has, has died, or that person has just ran away and not picking up your call and all, okay? So that's called a bad debt. Completely you have lost the hope of recovery of money. Fine. So you're expecting this to happen in future, in next year, not right now. Right now it's receivables only, but you just have a doubt, okay? So having this doubt and expecting this future losses, estimating this future losses, this activity in accounting called as anticipating the losses. Anticipating the losses, okay? So this is an anticipated loss. So what are you going to do about this? What are you going to do about this? See, in accounting, we have so many principles. We do not do the accounting just like that. Yeah. What you have to do over here is you have to record this loss. Now you will feel like, sir, this is stupidity. The loss has not happened. It may happen in future. Right now we have the asset only. So how can you say, sir, that we have to record this loss even though it has not occurred or it has not happened? Yeah, we have not lost anything. So how can we record this loss? This is stupidity. See, understand. We do accounting according to the accounting principles, not just like that. Okay, so our accounting principle, conservatism principle, principle of prudence says that whenever you have like this future losses, then you have to record that. Yeah. What does our conservatism principle says? It says that do not anticipate any future income. Yeah, do not expect any future income and record them in the books. No, don't do that. That's messed up. You cannot do that. But if there is any losses that you are thinking that may happen in future, then please provide for that. Please record that in the books. Be prepared for that losses, because when that losses actually happen in the future, then you are already prepared for it. That's the idea over here. You have to stay on the safe side, be conservative. Okay, that's what the conservatism principle or the prudence principle says. It says that do not overstate your assets, do not overstate your profits, okay, and do not understate your liabilities. Basically, conservatism principle says that do not show favorable position of your business. Do not show, what do you say, more than favorable position of your business. Show what is true and fair. Is that clear? Right. So here, what are you going to do about this? This is an anticipated loss. You are expecting that this loss may happen in future. So that is why you have to create a provision for that. Now, creating a provision sounds a bit technical and all, but in simple words, it's just two things. Understand? Creating a provision means you are recording estimated future losses. Yeah, how that will happen? By debiting the profit and loss account, and you are creating a special account called as provision for whatever the activity is. Yeah, here it is doubtful debts. So provision for doubtful debts. Okay, that special account will be created, which will always have credit balance, and then this account will be used to cover up the future losses. This is the basic idea in the provision. Don't worry, we'll see this with most clarity. Okay, see here how this will happen. This journal entry will be passed. See here, profit and loss account debit. Okay, you have recorded the loss now. If you are debiting the profit and loss, then what's happening? You are recording this loss. Okay, see, 5,000 is the future loss you are expecting. 5,000 money you will not receive in future. So you are debiting the profit and loss by 5,000. Okay, so profit and loss account, in profit and loss account, on the debit side the posting will go. Okay, so an expense, a loss has been recorded, and you are creating a special account called as provision for doubtful debts account, right? 5,000, 5,000. Why have you created this account? Because this account will be used later onwards in the next year to cancel off the bad debt, to write off the bad debt. Okay, that's what you do. That's what you do with every provisions. Fine. So see here, provisions are created out of profits. Provisions are created out of profits. If you want to increase the provision, here I have increased the provision. I told you now, provision will have which balance? They will have credit balance, right? So to increase it, you have to credit that. Increase in provision will lead to decrease in profits. Increase in provision, see here provision increase now, see blue thing, it's increased, the profit has decreased because profit also has credit balance, right? So here you have to use up the profits. So profits will be decreasing, decrease in profits. And if you want to decrease the provision for some reason, you want to reverse the provision, maybe it's not required, or you have to do some adjustment in the next year, then what you have to do, you have to debit the provision. You have to debit the provision. That's how you will decrease the provision, and then you have to credit the profits. So there will be increase in profits. Okay, right? So this is the thing. And now you may think, how will we decide this 5%, 95% and all? This is just estimation. Yeah, how much provision to make? See here, you have to estimate this based upon the past history of the business. Okay, it will be percentage of debtors or receivable, maybe 1%, 2%, 3%, 4%. It can be whatever the business feels. Okay, right, the management feels basically. So now I have to get deeper into the concept of provision. So let's see the accounting treatment. Okay, how you will do this. Fine. So let's see this entry properly. See here, let me just show you how the accounting will happen in the first year of the business. This is the first year of the business. Understand? Okay. So provision for doubtful debts account. Which type of account is this? This is a contra asset account. Understand? What do you mean by contra asset account? Contra asset account is an account which acts against the asset. This is the asset now, 1 lakh debtors and receivables. Now here you are expecting 5,000 loss will be there, right? You have anticipated a future loss. So for that you have created a provision, right? So provision account is created which has a credit balance. You have credited it to create it, right? So this is a contra asset account. It acts against this 1 lakh. It acts against this 1 lakh. Yeah, contra asset. That's why we called it contra asset. It's opposite to the asset account. Contra asset. It has a credit balance. Okay. So see here, credit balance means credit means plus, debit means minus. That's what credit balance means. So see this entry, what happened over here? PDD account got credited. It got increased. Okay. PDD account got credited because of P&L. This is the ledger account, the T account I'm showing over here. PDD account is increased because of P&L, by P&L 5,000, and then you will balance this account. Okay, 5,000 on both the sides in the totals, and then here there is a gap. That gap you have to fill by to balance C by D, the closing balance 5,000. Is that clear? Simple. And then see the debtors account. What will happen in the debtors account? Nothing. You have made the sales here. Debtors account is an asset account, so it's increasing, and it's increasing because of sales. You have made the sales now, right? It's because of sales, 1 lakh, and then the closing balance, right? 1 lakh total, and closing balance, the balancing figure, right? Yes. And then in trial balance, what will come? In the trial balance, see, this closing balance will come, right? PDD account has which balance? It has credit balance. PDD account means provision for doubtful debts. It has credit balance. So in the trial balance, in the credit column, it will be shown. Or you can think opposite sides. That also you can think. See here. Here it's on the debit side. So here it will be in the credit column. Okay, that interpretation also you can have. And debtors, see, this debtor is an asset account. It has debit balance. So the closing balance, this will go over here. Debtors 1 lakh. Clear? Simple. And then in P&L, what will happen? Which amount will come in P&L? Of course, it will come in P&L now. See here, the journal entry. PDD account is credited because of P&L, right? We considered that over here. PDD account is credited because of P&L. So now P&L account is debited. P&L account is debited. P&L account is debited because of PDD. To PDD account 5,000. Yeah. So here P&L account has what? It has credit balance, isn't it? Profit, na? It has credit balance. You take all the expenses over here and all the incomes over here. So this is an expense. You have recorded the loss over here. Understand this properly, okay? You have to understand this. You have recorded the loss over here. 5,000 loss has been recorded, okay? See, it's like this, minus, plus, okay? Right. So this is what happened. And then in the balance sheet, what will happen? In the balance sheet, you will take the debtors. How much are the debtors? Debtors are 1 lakh. So 1 lakh debtors will come over here. And then what you will do is, you will just do a small presentation. That's all it is, okay? Presentation. See, debtors 1 lakh minus PDD, provision for doubtful debts, 5,000. This is just presentation. Understand? We are not cancelling the PDD or something. No. Okay. 1 lakh minus 5,000, that's equal to 95,000. Now you have to understand the interpretation over here. Proper interpretation. If someone asks you, how much are the debtors, then what you will say? You have to say the debtors in my business are 1 lakh. If someone asks how much are your good debtors, then you will say my good debtors are 95,000. My good receivables are 95,000. Okay, that's the thing. This is your provision. This provision is a contra asset account. It acts against the asset. That is why we are representing it like this. It's just presentation, okay? This is not like we are reducing the debtors and all. No, debtors are still 1 lakh and PDD is still there in the books of 5,000. Okay, they are still alive. They still exist. It's not that you have cancelled the debtors by 5,000 and PDD is completely gone. No, in the next year, again, these things will be there. We'll go to the next year, but you have to understand this properly, the meaning properly. And one more understanding you have to get. See, why did we record the provision and all? Because of conservatism principle. I already explained. The second reason is, to cover up the bad debts that will happen in the future. Okay, because this PDD will be used in the next year to write that off. Okay. Now, if we did not do this, we did not create a provision and all, then what would happen? Understand that. For example, let's just say you did not do provision and all. You just took 1 lakh as it is over here. Debtors 1 lakh as it is. Okay, there is no 5,000, no 95,000, nothing. So if someone sees your balance sheet right now like this, debtors 1 lakh. So he or she may think that your business has a future economic benefit of 1 lakh. You are going to receive 1 lakh in the future. Future economic benefit. Debtors means money that is to be collected now. So this sends a wrong message. This sends a wrong message. It sends a message that you have a future economic benefit of 1 lakh, but actually it's not. You as an owner, you have made the credit sales and you know some money is not collectible. Some money may not be collectible. It will not be collected. So that is why you have to show it like this. 1 lakh are the debtors, but there is a doubt on 5,000 debtors. There is a doubt on 5,000 debtors. I expect that, our management expects that 95,000, yeah, owner, and by management I mean the owner, okay, they expect that, you expect that 95,000 is good debtors, that is receivable, that is collectible. Is that clear? That's the understanding. Fine. So you understood how this will happen, right? This is the journal entry. You have recorded the loss and created a special account, yeah, profit and loss account debit to PDD account, and then how the ledger postings happen, you understood, yeah. So now let's go to the year 2, yeah, the second year of the business, and let's see what will happen in the second year when there will be actual bad debts happening over there and all. Okay, let's go to the second year of this business and see how the accounting treatment will be done over there. Now here we are in the second year of the business, and let's say for example in the beginning of the second year what you did was you hired a bookkeeper, the person who does the basic accounting process, the process from the journal entries till the trial balance. Okay, journal, ledger, trial balance. So let's say now a year has passed by, and in this year you did not make any credit sales. Okay, you just did not make any credit sale, for example, to keep things simple. Now at the end of the year you have to prepare the financial statements. Now you go to your bookkeeper and you tell him, please prepare the financial statements. Now the bookkeeper is not equipped to do that. Yeah, he doesn't have that skill properly to prepare the financial statement, that is the profit and loss account and balance sheet. But you have a sound accounting knowledge, let's just say. So now you have to finalize the accounts and prepare the financial statements, the profit and loss account and the balance sheet. Okay, so you go to the bookkeeper and you see what data he has, right? The main output right now he has is the trial balance, isn't it? He passed the journal entries, he did the ledger accounts, and then whatever balances came from ledger account, he has took that into this statement that's called trial balance, isn't it? Yes. So all the debit and credit balances are there, but here only the relevant portion is shown over here. See now, if you see in the trial balance right now, the debtors balance is 96,000, and there is PDD account, that is provision for doubtful debts, 5,000 credit balance, yes, and then bad debts 4,000. Now what you have to do is you have to understand the back story of this. How did debtors became 96,000? Yeah, you have to understand the backstory properly, because in the first year, at the end of the first year, you know, because you only prepared the final accounts, the financial statements, and you know that debtors were 1 lakh. Debtors were 1 lakh, right? And PDD was there of 5,000. So in this year also, debtors should be 1 lakh, PDD also should be 5,000. But why it has become 96,000, the debtors? That's because, understand, in this current year, in between the year, in the second current year, in between, there were bad debts of 4,000. Let's say for example, some debtor has died. Okay, so we are not going to get definitely 4,000. That is why the bookkeeper has done an accounting treatment of that. There was a bad debt of 4,000 and bookkeeper has recorded it. Bad debts account debit 4,000. He has recorded the loss, bad debts account debit, yeah, an expense, a loss he has recorded by debiting it, and he has reduced the debtors account to debtors account 4,000. Yeah, because there is no future economic benefit of 4,000 now. So of course you have to cancel the debtors. So this basic entry has been done by the bookkeeper. If this entry has passed, then understand properly what is the effect of this in the ledger accounts. In the ledger accounts, of course, the debtors has fallen, right? Debtors balance has been fallen from 1 lakh to 96,000, and that 96,000 closing balance of debtors has come into the trial balance, 96,000. Is that clear? Absolutely clear. Now come to the bad debts. What has happened? You have just recorded the bad debts. I mean, the bookkeeper has just recorded the bad debts. He has not written it off. He has just recorded it. If he has just recorded it, then in the ledger account, what happens? In the bad debts account, see, bad debt is an expense account, it's a loss account. So bad debts account is debited. Bad debts account is debited because of debtors. Bad debts account is debited because of debtors. And then on the credit side, there is a gap. There is nothing over here. So here there will come by balance carried down. Yeah, because he has not written it off. If he had written it off, then there was something else. But he didn't. Mostly they will not write it off because they don't know the entire accounting procedures and everything. Okay. And all these things are done at the end of the year. That's why it's not written off immediately like that. Okay. So that is why this bad debt balance still exists. It has been just debited. It has not been credited and cancelled off. No, only debited. So it still exists in the book as an expense, as a loss. So that is why the balance is there, and that balance has been taken into the trial balance. Buy balance C by D, I told you now, if this is a bad debt account, here there is debtors, yeah, bad debts have been debited because of debtors, and on the credit side there is buy balance C by D. So that's why the balance is appearing in the trial balance. Is that clear? Bookkeeper has not written it off, the bad debts, so that is the reason it is appearing in the trial balance. Clear? Simple. So this is the backstory of this trial balance. And in the previous year, you maintained a provision of how much? In the previous year, you maintained a provision of 5%. Now also still you feel that you have to maintain 5% provision on doubtful debts, okay? And that calculation will happen on the debtors balance. So let's understand how it will happen. This is the backstory. Now what you have to do? Now understand, okay, you must have heard from other teachers that whatever comes in adjustment, it at least goes on 2 places, and whatever is in trial balance, that will only go to 1 place. Why is that so? We'll understand the entire logic, okay? So see, the first journal entry you will pass is to write off the bad debts through the provision. I told you now, we created the provision for 2 reasons. The first is to, to record the estimated loss that we did in the previous year. And then if there is a future loss, then we will cancel off that future loss with the provision account. Yeah, we have the provision of 5,000. So we will use this provision, we will use this PDD account to write off the bad debt that has happened in this year. Is that clear? So 4,000 bad debt has happened in this year. So this we have to write off. Writing off means just cancelling it off. It was debited earlier. To write off, to cancel it off, you have to make an equal credit. Then only you will cancel in accounting. That's how you cancel, with debits and credits. Okay. So writing off the bad debts through provision means what you have to do, you have to credit the bad debts account. You have to credit the bad debts account to bad debts account 4,000. Here it was debited, loss was recorded. Now that loss has to be cancelled to bad debts 4,000. Is this clear? Simple. Now what will be the debit? The debit will be provision. Provision for doubtful debts account. In provision you had 5,000 amount. In provision account you had 5,000 accounts here. Credit balance of 5,000. So if you're using it up, if you're using the provision to write off, then provision will decrease. So provision has credit balance. If it is decreasing, that means you have to debit. Provision for doubtful debts account, debit 4,000. You understood the entire logic of this? Really simple. You're using up the provision. Now understand, see, provision was 5,000, right? Provision was 5,000. You have used up the provision by 4,000 to write off the bad debts. So how much is left in provision account? In provision account only 1,000 is left. Remember this. I will come back to this. Only 1,000 is left in provision right now. Okay, fine. Now let's create provision at 5% on debtors, because there is an adjustment now. We have to create 5% on the debtors, right? That's what we do now. We are estimating right now that in the next year we may have 5% bad debts, 5% of debtors as bad debts. So that's why we are again creating the provision. That's how we do. We maintain the provisions every year, and this happens at the end of the year. Okay, we create the provisions. So creating provisions at 5% on debtors. But what is this amount? 3,800 and 3,800. How did I get this? Yeah, how did I get this 3,800 and 3,800? Let's understand. First, you have to create now the ledger accounts. Okay, let's see the ledger account and then we'll come back to this entry. Okay, see the first ledger account over here we have is bad debts account. Okay, so bad debts account is an expense account, loss account. It has debit balance, plus minus, right? So what you have to do is, see, this is after preparing the trial balance. Okay, these are the adjustments. So that is why you will take the opening balance from here. See, bad debts 4,000 now, debit opening balance is there. Yeah, debit, so you will take it on the debit side over here. To balance B by D 4,000. Clear? Simple. To balance B by D 4,000. Now in bad debts you had 4,000. This had to be written off, which you did through this journal entry. So bad debts account is credited. See here, bad debts account is credited because of PDD account. Bad debts account is credited because of PDD account. Bad debts account is credited because of PDD account. Is that clear? So that's how you wrote off the bad debts, yeah, by PDD 4,000. Is this clear? Simple. Now after this you have to open the PDD account. Now see the PDD account properly. This is very important. This is very important because from this account only you will get those numbers 3800, 3800. Okay, so see, PDD account is a contra asset account. It's against the asset. Asset has debit balance, contra asset is against the asset, so it has credit balance. You know, now it has the credit balance here, credit balance 5000, right? So PDD account open. So in PDD account we have 5000 balance, isn't it? See the trial balance, we have 5000 balance. Yeah, before the journal entry I'm talking about. Before this journal entries, we had 5000 balance in PDD. So take that in the PDD T account, ledger account. In PDD account, you will take the opening balance on the credit side because it has credit balance, right? So see, this is the credit side. By balance B by D brought down 5000. And then what you did, we passed this journal entry to write off the bad debts, right? So PDD account decreased. Yeah, PDD account decreased. PDD account debit because of bad debts 4000. Understand the chronology properly. Okay, first we had the opening balance 5000 and then we used the PDD decreased because of bad debts 4000, right? Yes. And then what you have to do, you have to see how much PDD you have to maintain this year. How much PDD you have to maintain this year. Now we know the PDD which we have to maintain is how much. It's really simple, 5% on the debtors. But will you take the debtors 96,000? Will you take the debtors 96,000 or will you take the debtors 1 lakh which was there in the beginning? Will you take this? No. What you have to do, always remember, you have to take the debtors after deducting all the bad debts. After deducting all the bad debts. Okay. Now this 96,000 is already deducted. Understand this. This 96,000 now. This is after deducting the bad debts, isn't it? See, this entry was passed. Yeah, from 1 lakh debtors became 96,000. So 96,000 is the amount of the debtors after deducting all the bad debts. So you can take this 96,000 directly. See here, you can take the 96,000 to calculate the new provision. Yeah, the provision that you have to maintain this year. So to calculate that, you have to take the debtors after deducting all bad debts, and you know that 96,000 is after only. So 96,000, see the calculation, 96,000 into 0.05, that's the 5%. Okay, so that's equal to 4,800. 4,800 provision you have to maintain. In the balance sheet, this amount should appear. In the balance sheet, debtors minus this amount should appear. This is the new provision. In balance sheet, we always take new provision. Write this somewhere. We always take new provision. Okay, right. So 4,800 provision you have to maintain, right? So in PDD ledger account, you have to take this as the closing balance. To balance C by D 4,800, because this is the new provision now that will be maintained in the balance sheet, right? So this is, you know, from here only it will go into the adjusted trial balance, and from adjusted trial balance to the balance sheet. Okay, so this is the closing balance. So first, what did I do? I took the opening balance. I used up the PDD to write off 4,000, and then I, took over here. What closing balance do we need? We needed 5%. So I calculated that little bit calculation and found out 4,800 I need to maintain. Then what you have to do, if 4,800 you have to maintain, then as a balancing figure, you have to calculate this amount. Whatever effect that will go in the P&L. Whatever amount that will hit in the profit and loss account, the P&L account. Okay, so how will you calculate this? It's really simple. See here, 5,000, see 5,000 you had in the PDD, right? And then you used up 4,000. You used up the 4,000, so minus 4,000. How much is left in, in PDD? 1,000 is left in PDD, right? So how much you need now? How much you need? You need 4,800. You need 4,800, but you have only 1,000. You have only 1,000. So how much additional you need? Do you need 4,800 entirely? See here, you already have 1,000 in provision. So you have to just add, let's just subtract 1,000 minus 4,800. So you need only 3,800. Did you understand the calculation? Let's see the calculation again. You had 5,000. You used up the 4,000 to write off the bad debt. You had left only 1,000. But how much you had to maintain? You had to maintain only 4,800, but you have 1,000 now. So minus 4,800. So how much extra do you need? Understand how much extra you need? Only 3,800. So that is what 3,800 will come from the profit and loss account. That is the extra thing that will come from the profit and loss account. Understood? So this, is the balancing figure. You can easily calculate like this also. See, as you put all the figures, see here, 4,000, 4,800, 8,800, the credit side is bigger, right? 8,800, the credit side is bigger, and then you will subtract this with the opening balance minus 5,000, okay? So 3,800, okay? As a balancing figure, you have to find this amount, okay? Is that clear? Or if the question says directly this, then you can find this as the balancing figure, okay? If you have three figures, then the fourth figure you can find out as the balancing figure, okay? So 3,800 will come over here, profit and loss account debit 3,800 to PDD account 3,800. Is this clear? This is how you have to do it. Fine. Okay, I hope you have understood this, okay? Loss has been recorded of 3,800 over here, profit and loss is debited, okay? That's the first thing, and PDD account is created by additional 3,800. You have put how much money, how much amount? 3,800 into PDD. Now this is not cash, okay? There is no movement of cash over here. These are non-cash items. No cash is being touched over here, okay? This is not cash. It's just that the funds are moving from the profit and loss to PDD, okay? So PDD account is credited by 3,800. PDD is increasing, you credited that, and profit and loss, a loss is being recorded, profit is decreasing, so you have debited that 3,800. Is that clear? Creation of 3,800 provision you did over here. So in total now how much you have? 4,800, isn't it? Here 1,000 was left after writing off, and then you created 3,800 over here. So now in total how much you have? You have 4,800, isn't it? 4,800 in the provision account, because that's the amount you need in PDD. Yeah, you calculated over here 96,000 into 5%. Not the same 5,000 as previously, no. It's not like that. It's not like you always have to maintain 5,000 or something like that. No, it's depend upon the percentages. Percentage on the debtors after deducting all bad debts, right? After deducting all bad debts, right? And then let's come to the debtors account. What will happen in the debtors account? Nothing, really simple. See, in debtors account, in the trial balance, there was 96,000. So that's the opening balance, and the closing balance is 96,000 only, because nothing happened in debtors account. You have to understand this. We haven't touched the receivables account. There was no credit sales this year, and we have not touched this at all, because the bad debts were already recorded previously, right? So it was already fallen by 4,000. It was already fallen by 4,000. So this is the opening balance, the closing balance. Okay, the gap was there. That's the balancing figure, closing balance, and that will go into the balance sheet. You understood this? Right. Now let's see the financial statement, the final account, profit and loss and balance sheet. See, it's really simple. We have profit and loss account where we record all the expenses on the debit side and all the incomes on the credit side, right? So now, how did I get this PDD 3,800 over here? It's really simple. Understand properly. There are two ways to do it. The first way is just do cross postings from the PDD account. See, in PDD what happened? Here you have by profit and loss 3,800. So you can do the cross posting easily to PDD 3,800. Yeah. Here PDD credited because of PNL, and then see the journal entry. Profit and loss account was debited because of PDD. Profit and loss account was debited because of PDD 3,800. Okay, this is the first way. And then there is also one more shortcut. Okay, you don't need to create the PDD account all. What is the shortcut? The shortcut is really simple. See, let me just show you. The shortcut is provision shortcut, and this works for any sort of provision. Okay, how much will it hit the profit and loss account? Okay, new provision first you have to take. You know how to calculate the new provision, right? This way. You have got 4,800. And then whatever expense that is related with provision is there, you have to take that, plus expense of the current year, the bad debts over here. Okay, you have to take that, add it up, and then subtract the old provision. Old provision means which is there in the trial balance, 5,000. This is the old provision. Okay, this is the old provision, this is the new provision. So minus the old provision, you will get how much amount you have to debit in profit and loss account, or how much amount will hit the profit and loss account. Okay, this is the shortcut. See how it will be applied. New provision 4,800 plus bad debts 4,000, which is equal to 8,800, isn't it? New provision is 4,800, and then bad debt that happened in the current year is how much? 4,000. And if there are any more bad debts also, that also you can take it over here only. For example, if there are any further bad debts. Okay, don't worry, we'll see about that in the next case. Right, so you will add that up. So 4,800 plus 4,000, that's equal to 8,800. And then you will subtract the old provision which is existing in the trial balance, old trial balance, that is 5,000. Okay, so minus 5,000. So let's just do that in the calculator, and you can see for yourself. It's the same answer, 4,800 plus 4,000 minus 5,000, that gives you 3,800. Can you see properly? 3,800. You see, in both the ways, yeah, with both the ways, you get the same answer. Here also you got 3,800. You could do the cross posting, or you can directly do this calculation. This is the trick, okay, technique, right? So you understood that, right? How much amount will go to profit and loss? What is the logic? What is the logic of this? It means that you have recorded the estimated loss over here. You had to maintain 4,800 provision. You had 1,000 already. So extra 3,800 you had to record, right? Extra 3,800 loss you have to record. You had to decrease the profit. Recording the expense, recording a loss means decreasing profits. Yeah, right. So that's regarding the profit and loss. You understood. Two ways are there. One is the shortcut and one is creating the account. Just creating the ledger account and taking the cross posting. Fine. And then let's come to the balance sheet. In balance sheet, what's happening? In balance sheet, you can see here we have debtors and then PDD minus PDD, and then in the outer column we have taken the amount. What is the logic of this? Really simple. You already know from the previous year, the first year what we did. See, understand, how will you take this 96,000? You have to take this from the, the closing balance, by balance C by D, 96,000. All right, or you can take it from the trial balance only directly, 96,000. Okay, that's the debtors you have. But now out of those debtors, you have a doubt. You have a doubt on how much? On 5% of that. Yeah, 5% of that. That's 4,800. So this is your contra asset, yeah, provision, which acts against the debtors, which acts against the asset, which has credit balance. And you all know credit balance items are shown over here in the liability side. But since this is a contra asset, what we have to do, we just have to present it on the asset side. Yeah, just representation. We just have to show it like this: 96,000 minus provision on doubtful debts, 4,800. Okay, just subtract that and write the amount in the outer column, 91,200. Now if someone asks you what are your debtors, how much are your debtors, then what will you say? You will say 96,000 are my debtors. But if someone asks you what are your good debtors, then that's 91,200. Yeah, the good receivable, the good debtors. Okay, and the doubtful is 4,800. Is that clear? Now you have to understand one logic over here. Why have we not taken bad debts over here? You can see in the trial balance there are bad debts. Why the bad debts are not taken over here? Because understand, the accounting of the bad debt is already done. Accounting of the bad debt is already done by the bookkeeper. He has passed this basic entry, right, recording of bad debts, and he has reduced the debtors already by 4,000. That is why if you again deduct the bad debts over here, if you subtract the bad debts over here, then you are making double accounting over here, and that's a big mistake. Okay, 2 times you are recording the bad debts, so that's wrong. It's already fallen from 1 lakh, it has become 96,000. Yeah, you have taken 96,000 over here. It's already deducted the bad debts. Is this clear? So that is why you will not take the bad debts. And many of the teachers say, right, that whatever we have in trial balance, those items will only go on one place, and whatever we have in adjustments, that will at least go on to 2 places. Yeah, what does that mean over here right now? The meaning is, see, let's see, all those kinds of teachers, they teach you the shortcut. That shortcut only they teach you the shortcut, not the ledger account. They teach you this shortcut. So this shortcut, you do this in the P&L only. Here only you do this shortcut. Okay, here only, not separately calculation. Here only you do, and you take 3,800 in the outer column. So what happens is, you take the, see, new provision plus bad debts minus old provision. So bad debt will come over here. It's not a part of profit and loss. It's not a part of profit and loss. It's just the part of the calculation. That's why this bad debt is coming onto one place, and that one place is profit and loss inside rough calculation. Okay, it's not part of profit and loss, just the rough calculation. Okay, that's why that trial balance bad debts will come over here in that calculation, and this amount will come over here, 3,800. The same thing will be happening over here. So bad debt has gone to one place, and the debtors also, this debtors will also go to one place. What one place? Here in the balance sheet, 96,000. Okay, and then provision on doubtful debts, which is the adjustment, and most of the teachers say that it will at least go on to 2 places. Why do they say that? See here, PDD has come into the profit and loss, isn't it? It has come into profit and loss as well as in the balance sheet. But this is not a great idea to teach. Yeah, only the shortcuts. No, you have to get the whole picture. Understand, in profit and loss, only the extra amount comes. Write this somewhere. Okay, these are special tips I'm saying you. in profit and loss only extra amount comes, but in the balance sheet whatever new provision is there, whole new provision will come. Okay, write this in P&L only extra amount of provision will come, and in balance sheet the whole amount of new provision will come. Okay, is that clear? In profit and loss, if you're taking this calculation also, what will happen? In the inner column you will do this 4,800 plus 4,000 minus 5,000, but in the outer column 3,800 will only come. Now that's just the extra amount. Is that clear? And the balance sheet the whole new provision will come. Okay, so 96,000 minus 4,800, that's equal to 91,200. Is this clear? Simple and straightforward, right? So this is how you have communicated the true and fair view of your business, position of your business, that you have debtors of 96,000 but you have a doubt on 4,800, so you're expecting the good receivables, the good debtors would be 91,200. Is this clear? You understood this? If you have any doubts regarding this, please message me through Instagram or write the comment down below. Okay, fine. So this is the case when in the trial balance there are there is a old provision and there is also a bad debt that has happened in the current year, and because of this bad debt the debtors are already fallen. Okay, this is the case, and in adjustment you have to maintain provision also. If this is the scenario you get in final accounts while preparing the financial statements, then these are the procedures you have to follow. These are the procedures you have to follow. Now we have to discuss one more case where the same thing will be there, but in adjustment there will be further bad debts. After preparing the trial balance and everything, at the end of the year, okay, after preparation of trial balance, you get a call from your customer that one more person, that customer has died, his relative or someone has called you and told you that we will not be able to pay you money because the person has died, right? So after preparation of trial balance, you will have a bad debt, further bad debt. So at that time what you have to do, how the treatment will change, that is what we are going to discuss in the very next case. So let's go to that case 2 of second year. In second year only, but case 2, okay, different type of situation will happen. Let's see that. You understood this one, right? So let's go to the case 2 of the second year. Now here we have the case 2 where we have got further bad debts in the adjustment. It's really simple, and little bit I have changed the scenario. Okay, the debtors I have changed to 60,000. Okay, let's think about a different example. Don't relate this with the first year. Okay, little bit different example I have taken, right? So see, debtors are 60,000 in the trial balance. Provision for doubtful debts is 5,000 maintained in the business. This is also known as old provision. Whatever provision that still exists in the trial balance is called as the old provision, which is coming from the previous year. Okay, and then bad debts that have happened in the current year is 3,000. Okay, now you already know, you have seen in the previous example that this bad debt means what? Debtors are already deducted. Yeah, because the bookkeeper has passed an entry and debtors are already fallen. Debtors were actually 63,000, but right now it is 60,000 because of the bad debts. This bad debts accounting is already done. It is recorded. Bad debts account debit to debtors account. Clear? Yes, you know that. And then in adjustment they are saying further bad debts of 6,000 and create provision on doubtful debts at 10% on debtors. Okay, so I have changed the entire problem in this case too. So let's see. So now, what is the entry that the bookkeeper has passed? The entry is this, right? The backstory entry, the backstory, this 3,000 entry. The entry is bad debts account debit 3,000 to debtors account 3,000. Debtors are already fallen. Okay, this is the bookkeeper entry, okay, not yours. You are preparing the financial statements now, so you will not pass this entry. This entry is already passed, right? So forget about that entry now. Let's understand the following entries. Okay, so now in the adjustment, you have got further bad debts of 6,000. So you have to record this. The bookkeeper did not record this further bad debts because this happened after preparation of trial balance. After preparation of trial balance, you got a call from your customer that they will not pay because that person has died or whatever it is, he has gone bankrupt. Yeah, a number of reasons can be there. So you have to record the bad debts. How will you record the bad debts? The same way only. There is no difference. The same way you will record the bad debts. Bad debt is an expense. To record, you have to debit, right? To record the expense is increasing means you have to debit. It's a loss. Bad debts account debit to debtors account. Yeah, debtors you have to decrease the asset because you don't have future economic benefit. Yeah, you will not going to receive that 6,000. right? Further bad debt 6,000 now, so 6,000, 6,000. Clear? Simple. After that, what you have to do, after that you have to write off the bad debts. Bookkeeper did not write off the bad debts, and then you have further bad debt of 6,000. Yeah, bookkeeper did not write off 3,000 of bad debts, right, which are there in the trial balance. It has not been written off, and further bad debts are there of 6,000 which you just recorded. Now both of these 3,000 plus 6,000 needs to be written off, needs to be cancelled. So you have to cancel that through what? Through provision. You all know we are maintaining the provision for doubtful debts over here, so we have to write off through provision. So how do you do that? It's really simple. You have seen that in the previous video, right? Not in the previous video, in the previous case, that is, see, PDD account is debited and bad debts accounts are credited, right? This is what you do. Yes, previously bad debts is debited, now you credit and cancel them, and PDD you have to debit. See here, PDD account debit, you're using up the provision by 9,000, and bad debts account is being credited by 9,000. See, here there was a debit of bad debt by 3,000, and then there was a debit of 6,000. So in total 9,000 debits. So to cancel off, you have to make an equal 9,000 credit of bad debts. Is this clear? Simple. And you debited the PDD account. Now understand properly. If you see the trial balance, how much amount do you have in PDD? How much amount do you have in PDD? Understand. You had 5,000 in PDD, right? You had 5,000 in PDD, old provision on doubtful debts. You have used up how much now? More than what it's there. See here, minus 9,000. So you have used up 4,000 extra. So your PDD account has become 4,000 negative. 4,000 negative. So now what you have to do? You have to maintain provision. How much? 10%. So let's calculate how much new provision would be. Yeah, how much new provision would be. How do you calculate new provision? You all know we calculate this percentage on the debtors after deducting all bad debts. After deducting all bad debts. Yeah, I told you. So what are the debtors after deducting all the bad debts? It's really simple. See, this 6,000 is after deducting this 3,000. This 6,000 is after deducting this 3,000. Yeah, so sorry, not 6,000, 60,000. 60,000, this 60,000 is after deducting this 3,000. So you will only deduct this 6,000. Which one? The further bad debts one. You will only deduct further bad debts, not this current year bad debts, because current year bad debt is already deducted. Okay, so minus 6,000, that will give you 54,000. So 54,000 is your debtors receivables after deducting all bad debts. Is this clear? Really simple and straightforward. Okay, so on this 54,000 you have to calculate 10%, okay, into 0.10. okay, write this somewhere. Okay, you will not deduct the bad debts that is appearing in the trial balance. We don't do that in the balance sheet and also while calculating the new provision. Fine. So that's equal to 5,400. This is the provision you have to maintain this year. This is the provision you have to maintain this year, right? But we know that our provision, in our provision account, there is 4,000 negative balance. From 4,000 negative balance, you have to go over here 5,400 positive balance. So what you have to do, first reverse that 4,000 and then you have to go to 5,400. So basically you have to go to how much? You have to go to 9,400. Yeah, let me just show you in the ledger account, you will get it better. Okay, so you have written off the bad debts through provision 9,000. Your provision became 4,000 negative, and you calculated the new provision, that is 60,000, the debtors from trial balance minus further bad debts. You will not deduct this 3,000. You will only deduct further bad debt because 3,000 is already deducted. Previously debtors were 63,000 actually. 63,000 actually. You cannot see that over here, but you can understand. You're an accountant over here. You have to see the backstory. You have to visualize everything, right? 60,000 minus 6,000, 54,000 is your debtors after deducting all bad debts. Shall I write that? Sorry, it's written debtors after deducting all bad debts. Okay, debtors after deducting all bad debts. So on this you will calculate 10%, that is 5,400, which is the provision, new provision that you have to maintain. This amount will be deducted from the balance sheet, yeah, just presentation, and you have to what? You have to maintain this provision. So whatever extra amount that you need, you have to put into the provision. Now let's see how much amount we have to put into the provision. Let's first see the shortcut. You guys like the shortcut more, right? So let's see the shortcut. So how the shortcut will happen? You all know the formula of shortcut: new provision plus expense of current year minus old provision, right? This is the formula. So how it will be applied? Really simple. The new provision is how much? Let's see, NP. New provision is 5,400. Okay, 5,400, and then you have to add the expenses. First you will add the bad debts that happened in current year. Bad debts happened in current year. Bad debts current year. Let's write the whole thing. Okay, bad debts current year, how much were there? 3,000. Okay, so 3,000 you will add, and then you will add further bad debts also, because both are expenses only related with provision. So further BD, that's equal to how much? 6,000. Yeah, it's given in the adjustment. And then you will subtract the old provision. So OP we can say, right? Not that OP, right? Old provision, that's equal to, what's the old provision? Old provision is 5,000. So 5,000 minus, so that gives you how much? I always use the calculator. I don't want to make mistakes right now. 5,400 plus 3,000 plus 6,000 minus 5,000, that gives you 9,400. So 9,400 you have to record a loss in profit and loss, and you have to create additional provision. That means you have to transfer this much amount into the provision account right now. Okay, is that clear? See, 9,400, this is the amount that will hit, by hitting I mean it will be debited, hit in profit and loss. This much amount will hit in profit and loss account. Okay, debit, I mean debit. Okay, let's just write everything, right? Is that clear? This is not the new provision. New provision is 5,400. This will go to balance sheet. This will go to balance sheet. This will hit in P&L, right? Yes, you understood. So see here, let me just show you now the accounts. If you want to see the accounts, see 9,400, 9,400, the journal entry. Okay, directly, if you follow the shortcut 9,400, then you get the amount, how much you have to take in the journal entry. 9,400, 9,400. Clear? Profit and loss account debit, you have recorded the loss of 9,400, profits are decreased by 9,400, and you have transferred this much amount to provision for doubtful debts account, this special account, because in the next year you are expecting 10% are doubtful, 10% are doubtful. So to cover that loss, you have created this special account, right? I mean, it was already there, but there was not sufficient amount, so you have put the sufficient amount to cover up that it maintains to 10% on debtors, right? So see the ledger account, it's really simple, it's nothing. See the ledger accounts, you can see the ledger accounts now. Oh my god, yeah. So see the bad debts account, it's a loss expense account, plus minus, yeah. So bad debts is 3,000, so you will take it on the the debit side, opening balance to balance divided 3,000, and then there were what? Further bad debts of 6,000. Further bad debts happened now, so that you recorded. See the journal entry, bad debts account debit, bad debts account debit, you recorded the bad debts. It happened because of debtors, so debtors account was credited because asset is decreasing. Yeah, there is no future economic benefit, so bad debts account debit because of debtors 6,000. Okay, further bad debts you recorded. So how much you have in bad debts right now? 9,000. You have to understand this chronology properly, okay, in the T accounts. So 9,000 bad debts you have, this much you have to write off now through provision, which you have to do. So bad debt is decreasing, you are writing it off, you are cancelling it off, minus because of provision, through provision. So by provision on doubtful debts, 9,000. Clear? So bad debts account is completely finished. Okay, this is how it will be finished. In the previous example also it finished. Okay, so it is finished. And then come to the debtors account, which is an asset account. Now here what happened, the opening balance was 60,000. So 60,000 over here to balance B by D. It's an asset account, debit balance. Yeah, so opening balance on the debit side 60,000. And then what happened, the cross posting from the bad debts account. See here, debtors were decreased because of bad debts, right? Debtors was credited because of bad debts. Debtors were credited because of bad debts. So debtors were credited because of bad debts. All right, 6,000. And then you have to find out the balancing figure. 60,000 is the bigger side, 60,000 in both the total column, and then 60,000 minus 6,000, that's equal to 54,000. This is the balance after deducting the further bad debt, all the bad debt actually, right? By balance C by D, 54,000. You get this? Simple. And then PDD account, see the PDD account, In the PDD account, what do you do? PDD account is a contra asset account which it has credit balance. So opening balance will be on the credit side. Take the opening balance from the trial balance 5,000. Okay, take it over here. Yeah, it will be on the credit side. Buy balance B by D 5,000. And then what you have to do? You have to use this to write off the bad debts. Yeah, you can see the cross posting from PDD from bad debts account. See here. Here PDD is coming, right? 9,000. So here it will be on the opposite side, too bad debt 9,000. But what is the logic? Logic is really simple. PDD is decreasing. Yeah, PDD account is decreasing. It's getting debited because of bad debt. PDD account is decreasing. It is getting debited because of bad debt. 9,000 is the amount, right? You get this. Fine. And then the closing balance, how much you have to maintain. What is the closing balance you have to maintain? The new provision. This is the new provision. New provision, you know, is 5,400. So that you will take over here 5,400. Simple and straightforward. Always remember, this is the opening balance. This figure will come from the trial balance. And then the closing balance is a new provision which you have to maintain, right? And then whatever bad debts that happen now, that will come over here. That will come over here. Okay, the current year bad debts also, further bad debts also. It's coming with one figure. See here. 3,000 plus 6,000. That was 9,000. So 9,000 you wrote off now. 9,000 you wrote off. So that 9,000 entire amount is coming at once over here. 9,000. But let's just say if you are creating the PDD account, okay, and you have not created bad debts account, then what you will do? You can also do it like this: 2 bad debt 3,000, 2 bad debt 6,000. Yeah, separately also you can take. Yeah, you will not make mistakes. In total it will be 9,000 only. Fine. So the balancing figure will be 9,400, isn't it? See. 9,000 plus 5,400, this is the bigger side, 14,400 minus the opening balance, that is 5,000. How much you're getting? 9,400. So 9,400 is the extra amount that you need in PDD to maintain 10% on debtors provision, right? So that's the amount. This is the balancing figure which you can take it over here, right, in the journal entry. But the shortcut is better. If you find shortcut is better, do the shortcut. I will not force you anything. You can do whatever you like. Okay, it's up to you, because ultimately you have to write the exam, right? And it's fine, you will get the marks both the ways. So 9,400, right? So, and this amount will also hit the profit and loss account. Profit and loss account, expenses over here, incomes over here, and this is an expense. You are recording the future anticipated loss, right? So to PDD account, profit and loss account debit because of PDD. Profit and loss account is debited because of PDD, right? Clear? You understood this? Easy, simple. Now you have to understand what will happen in the balance sheet. You can see clearly and understand. See, it's really simple. In balance sheet, which debtors you are going to take? In balance sheet, you are going to take, see, two ways are there. Either you can take this directly 54,000, okay, directly 54,000, or more better presentation is you will take this 60,000. Now you know this 60,000 is after deducting this 3,000, okay? So this bad debts will not come in the balance sheet. I have told you, bad debts in the trial balance will not come in the balance sheet, okay? So you will take this 60,000, better presentation, 60,000 debtors, and you will deduct the further bad debts, which was there in the adjustment. Now this you will deduct, okay, 6,000, and then 54,000 will be shown over here in the inner column only. Now these are your debtors. 54,000 are your debtors. Now if someone asks you, understand this, if someone asks you what are your debtors, you will not say 60,000, you will say 54,000. That's the difference, okay? Here, if someone asks you what are your debtors, you will say 54,000 are my debtors, okay? And I have a doubt on 5,400, so I have created a provision for that, and remaining is my good debtors, good receivables, 48,600, okay? So 60,000 was the debtors from trial balance, but there was further bad debt of 6,000, so that will completely wipe off your debtors. I mean, completely 6,000 will be wiped off. So 54,000 will be your the total debtors. Out of this, you have a doubt on 10%, that is 5,400. So you will present it like this, minus 5,500. So the good debtors are 48,600. Is this clear? You have to understand this properly. It's really simple and straightforward. It's not difficult, okay? So further bad debts will always be subtracted over here, okay? Because normally what you will do, normally you will not prepare bad debts account and debtors account. If you are preparing the final accounts, then maybe they will just ask you profit and loss and balance sheet or something like that. Then you will not be preparing these two accounts. So that is why you have to understand properly. You will not have this figure immediately, right? This figure you will not have immediately. You will have this figure in the question. So you will take this 60,000 and further bad debts you will subtract over here. Further bad debts you will subtract over here. Now you can ask that, sir, you told us that whatever that comes in the adjustment, yeah, like other teachers say that it will go on to the at least two places. So how come further bad debt has gone to two places? It has gone to two places. See, one is in the balance sheet and the second one is in the P&L. Now of course we have just taken one figure over here, that is why you cannot see that. But I told you most of the teachers will do this rough calculation over here only, rough calculation. So in the rough calculation you will see further bad debt has come over here. See the calculation. Bad debt has come, yeah, this has gone to one place, this trial balance bad debts, and this adjustment bad debt, further bad debt have gone to two places, in this rough calculation as well as in the balance sheet. Okay, two places, right? So this is the thing. Okay, new provision plus current year expenses and also the adjustment expense related with provision, both are bad debts now, but that's current year bad debts after the trial balance, and then minus old provision. Okay, you will get how much you have to debit in P&L that you have taken as a single amount, 9,400, which is the great idea of presentation. Okay, directly just take one amount. Okay, don't do all this in the profit and loss only, but to save time you can do, it doesn't matter. Okay, so that's it. I hope you have understood. If you have any doubts in this, please ask me. You can take the screenshot if you want. Yeah, you can take the screenshot, right? So that's it for this video. Okay, see you in the next video. Bye.